and I'm going to pick back up where we left off. Okay, our next one is from the new Soros. Okay, so good morning, ICT. I had a few questions. How do you trade trending markets like the one unfolding right now in the currencies? Seems like I have everything wrong. Is there something that you thought that works better in this condition? Knowing that most of us learned trading in consolidating markets. Well, you're using the underlying institutional order flow as a supporting basis for the trade. Is the market trading higher? Then we're going to be looking for support to be found at all down closed candles and or swing lows that are broken and rejected back. In other words, it dips down below to pick up sell stops and rejects that. Then we would go back into looking for down closed candles supporting price. There's nothing really more that you need to be worrying about, especially when in a trending market, because everything should be supported in terms of institutional order flow as I teach it. There's nothing that you haven't already been taught, even though you have been taught in consolidating markets. You're probably just not trusting the markets that are starting to have developing trends. And that's okay. There's nothing wrong with that. But eventually you're going to have to loosen up a little bit and let these trends move, and you try to get a part of it. Don't be afraid to engage in it. We are in a part of the year where the market does have a lot better movement, and the conditions are in fact favorable for trends. So you want to be looking for the ideas to support those trending models. And I already answered this. Let's see, Fred, is that a 5K account you've run up? I'm assuming you're referring to the demo account that I did 120% on in the month of September. That was a $10,000 account. All demo, of course. Michael, how is the action and reaction of price likely to differ between fair value gaps occurring in premium arrays and fair value gaps occurring in discount arrays? When the bias is bullish, when the bias is bearish. How is the action and reaction of price likely to differ between fair value gaps occurring in premium arrays and fair value gaps? There is really no distinction between them. Like, I don't see any superiority or distinction between the two. It's pretty much the same thing. You're filling in an area of inefficiency, so one-sidedness on the marketplace just gets filled in. So I don't think there's any kind of one's better than the other, or if there's any measurable distinction between the two. And I'm not really sure if I answered that question or not. So if that didn't satisfy you, just try to do your best to rephrase it in a way that hopefully I can understand it outside of what would seem otherwise if you're just asking if there's one particular discount or premium fair value gap over the other. Is it better to trade a fair value gap from a discount array or a premium array? And to answer that simply, it's I haven't seen that, no. All right, Michael, could you please advise on whether I have correctly identified the fair value gaps on the Euro-Pound monthly chart? I have difficulty in identifying fair value gaps when there are consecutive up and down candles. I will be very grateful if you could provide guidance. All right, so let's zoom in here a little bit. All right, so you have, is this a fair value gap correct, or should it start from the top of the down candle? I would like, well, it's two. You can do two areas. You can do the top of this candle here because price trades through that after it's been going down. It's all sell side. And then we have